In this video, I want to look at what happens to a short option position when the share price moves and we rebalance our hedge frequently. So I'm going to look at a scenario where the stock price moves from 100 to 99.5, down to 99, back up to 99.5, and back up to 100. And we're going to look at a short position of 1,000 put options with strike 100 and maturity 1 year. So we go short 1,000 put options, strike 100, maturity 1 year. There they are. We looked at this before where we had the stock go down from 100 down to 99, back up to 100, rebalancing our delta hedge the whole time, and we lost $19 and a penny. So now we're going to go 100 down to 99.5, down to 99, back to 99.5, back up to 100. So we're going to delta hedge. So we're going to book shares. It puts the correct number of shares in for the delta hedge at the correct price. So now we have a delta hedge portfolio. Our chart looks like the correct chart. We're at this relative maximum. And now let's make the market move. 100 goes down to 99.5. We lose a little bit of money. Rebalance our delta hedge. Stock goes down to 99, lose a little more money, rebalance our delta hedge. Stock goes up to 99.5, lose a little more money, rebalance our delta hedge. Stock goes up to 100, lose a little more money, rebalance our delta hedge, and now we're back to where we started. And if we look at this, we lost $9.51 versus $19 and a penny when the stock just went from 100 down to 99, back up to 100. So at first glance, one would look at this and say rebalancing the delta hedge more frequently reduces the size of our losses. Now, let's go back to the beginning, and the fallacy in that is as follows. So let's go short, 1,000 puts, fair price. Here we are at the beginning. We're going to book the initial delta hedge, and the stock goes down to 99.5. We have a small loss, $2.36. So this is a small loss, and now we have a choice to make. We have to decide, do we rebalance the hedge or not? If we rebalance the hedge, we lock in that loss forever. If we don't rebalance the hedge, that loss is not yet locked in. So for example, if the stock goes back up to 100, we're back to 0. Stock goes to 99.5, we rebalance our delta hedge. Stock goes back up to 100, we've locked in that loss. That loss, no matter what happens, we can't regain it. So when the stock is sitting at 99.5, we have a choice to make. Do we lock in a loss, and if the stock goes back up to 100, we've locked in that loss, we can't get the money back? Or do we wait, and if the stock goes back up to 100, we haven't locked in any loss? Of course, the opposite can happen. Stock goes to 99.5, we have a small loss. If the stock goes down to 99 and we haven't rebalanced the delta hedge, our losses are larger. And so we have this trading decision to make about how frequently we rebalance our delta hedges, and it's not entirely clear what the strategy ought to be.